Hey, LeAnne Carswell with the Expert Real Estate Team. So today is November the 11th. It is Veterans Day, so happy Veterans Day to all you veterans out there. And by the time you see this, I know it will be late. So happy belated Veterans Day. So today we're going to go over a few slides from Keeping Current Matters that keeps us in the loop. This is our market update for the month. So let's go to share my screen mode. So I thought this was really interesting that the average FICO score has gone up. And you may ask, why did the average FICO score go up? Well, households use that stimulus check to pay down debt, save the money. So only 29% went out and spent the money. So those FICO scores, they're paying down debt, and that helps that FICO score go up. So that was really encouraging. On down, something else that was, may blow your mind. Business applications in the United States have gone through the roof with COVID. So I guess people are at home and realized, I like my job, but I'm laid off or whatever the case may be, and I want to start that home-based business or that business that I've always wanted to do. So this is the year that it's happened. Isn't that crazy? The next slide I think is very encouraging. So consumer spending has not dropped that much since January the 1st. So nationally, we've dropped 3.7% since COVID started. Actually, South Carolina is up 6.1%. Not sure what's happening in South Dakota or Alaska, but they're down, of course, pretty much. But look at all the blue. I mean, the blue are up. They're positive. So very interesting. I'm just kind of a nerd like that. I like seeing those types of statistics because our country, in my mind, is very healthy. Unemployment filings are down. So back at the height of the pandemic, we were up to 6.9 weekly filings. Now we're down to 750,000 at the end of October. So very encouraging. And then those folks who are receiving unemployment insurance at the highest was right at 25 million. Now it's down to 7.3 million. So that is a lot. And it lets you know people have gone back to work. So the next slide, I thought that was interesting. Forbearances. So what are forbearances? Forbearances is where something happened, you're unable to make your mortgage payment, and the mortgage company is working with you. So again, back at the height of COVID, there were 4.76 million folks that were being helped through forbearance. And as COVID's gone on, we're down to about 3 million. I think that's, again, encouraging. And then this is interesting. So in May, and this is all mortgages. So of all mortgages in the United States, 8.47% were in forbearance or going through the forbearance process. That we're down to 5.83%. Very encouraging. So what happened to them all, you may ask? Let's see. Here's what happened to them all. Some people extended, so 2.4 million extended because things, were still happening and they haven't gone back to work or they haven't been able to catch up. 44% were removed while going through it, so they caught themselves back up. We had one of our properties that the owner was going through forbearance. We ended up selling it and listing it and selling it because they had equity. They were wanting to move anyway. So just, that was providence that that COVID happened about the same time they wanted to sell. So, 44% came out of it. 481,000 expired. Their forbearance agreement with the mortgage company expired, and they started the loss mitigation process, meaning foreclosure. And then 80,000 were expired delinquent. So I don't guess the foreclosure has started happening yet, the whole process. So I think that was, again, another interesting slide. So from Ivy Zellman, who is a well-known, I guess she's just a knower of the market. The likelihood of us having a foreclosure crisis again is about 0%. Now that is very, very encouraging for anybody who is like, oh, I don't want to get into the market because, I'm worried about another wave of foreclosures coming like what happened in 7, 8, 9. It's just not going to happen. I mean, things are much better than they were. People have equity now. So will there be foreclosures? Yeah, everybody's gonna, not everybody, but their foreclosures can still happen. So, things can happen, but not in mass like it happened back in 08. Let's see, months of homes for sale is down, meaning there is no inventory out there. I've been beating this drum pretty much all year. We've had very low inventory all year long. And if you've ever thought of selling and trading up or trading down, now's the time to do it. So let's look into that a little bit more. So it took me a few times of seeing this slide before I really understood it. So the green is new listings coming into the market. They are getting absorbed really quickly. Of all listings, so the ones that haven't sold and they're just hanging out there and, they may be overpriced or in bad condition or bad location, we're down on those too. But when things hit the market, they are gone. So that's an encouraging sign. 19. I did want to show you this. So the top 3 reasons homeowners are not putting their homes on the market. Number 1, financial uncertainty. Number 2, life's too uncertain right now. Number 3, COVID and health concerns. So let's talk about that a little bit. So financial uncertainty, as we go through these slides, hopefully we will allay any of those fears. Life too uncertain right now could mean anything, probably related to COVID and the election and all, which we still don't know who's going to be the president. So a lot of folks kind of holding back about that. With the COVID and the health concerns, now we do everything we can as realtors to be COVID safe, from disinfecting the homes after we show them, before we show them, to wearing our masks, to wearing booties, to wearing gloves. If you are concerned about catching COVID, when you're going to look for a house, there's a ton of things we can do to preempt that and make sure that doesn't happen. We respect those feelings, and we want to make sure that you are comfortable and safe when you go out house hunting, or if you're putting your home on the market and having people into your home. So there's a bunch of things we can do. So don't, if you need to make a move, don't let that hold you back. This is kind of what I'm trying to say there. This is from Jeff Tucker. He's with Zillow. Homeowners who feel that life is uncertain right now may think they can still get a strong price if they delay selling until they have more clarity. The catch is that waiting to sell may raise the cost of a trade-up. This falls record low mortgage rates, which make a trade-up more affordable on a monthly basis, are not guaranteed to last. So this is something that I wrote down. There's a cost to waiting. So if you're uncertain, there's a cost to waiting. That's one thing to think about, because prices are appreciating, rates are forecasted to go up, and right now home affordability is high. We're going to go over home affordability here in a couple of slides. Let's see. Home prices. Projections on home prices. Most of the economists are projecting home prices to go up. There's one CoreLogic that's thinking, but most of them are saying, yes, they're going up. The mortgage bankers forecast is to prepare for rising mortgage rates. So now are we talking through the roof? No. But I mean, they're at like 2.7, 2.8 today. You know, a rise to 3.6 or 3.9 could be $50,000 on a house. And that can be huge. So when the rate's lower, any little bit in interest rate takes away your purchasing power. So think about it like that. So even though you may not be ready right this minute, you may want to weigh your options up, going on ahead and pulling the trigger and doing something. So, because there is a cost if you wait. Housing affordability. Now, I think this is really interesting. So here's the key with this slide. The higher the number, the better it is. So back in 2012, you know, homes were really affordable. Here's as we were going through the 90s and the 2000s. Remember when 2006, when, you know, things were not very affordable. And then the market fell apart and houses got real affordable all of a sudden. Well, that's come down somewhat, but we're not back to where we were back in the 90s and the 2006 number. So houses are affordable. Not want to go over this slide. So 23, I did want to show you, 33. Existing home sales. Look what happened when COVID hit. Existing home sales went to nothing, but then we rebounded back. I just think that's a neat slide to look at. Then I wanted to show you slide 43. Percentage of distressed property sales. So we get a lot of folks that call our office that say, hey, I want to buy foreclosure. And, you know, as much as we try and as hard as we try, it's not impossible to buy foreclosure. It's just really hard right now because distressed properties are down to about 1% of our market. So you've got to be super fast on the draw, paying cash, close real fast type situation. You know, the faster those mortgage companies can get distressed properties off their books, that's what they're looking to do. So, and that may or may not work for every buyer. So it's just something to think about. We try to educate you about that. And then I wanted to go to 66. Mortgage rates, where they were this time last year, and they've come down to 2.78%. I just think that's a really cool slide. When you see it that way, kind of hits home. 30-year fixed. Mortgage rate projections. Again, you know, this isn't a whole lot, but when it comes to purchasing power, it can really be a whole lot. So we want to try to get you into the best house, your dream home, and we would love to do it at these low rates. And if you're watching this and you have a mortgage right now and your rate, you know, is 3.5%, 4%, you may want to look at refinancing. So their refinances are happening out the wazoo right now. So think about that. And then this is another slide. Mortgage rates, where are they going? I mean, they'll be pretty much at 3% next year. So at any rate, I hope this was helpful. If you're thinking of buying, if you're thinking of selling, if you're just interested in what the market's doing, please reach out to us. I'm happy to share any knowledge that I've got. I love talking, as you can tell. And like us on Facebook. I always get this backwards. Make sure you, or if you're on YouTube, make sure you subscribe to us. And again, we at the Expert Real Estate Team want to be your resource for all things real estate. Thank you so much. Talk to you soon.